Hey, welcome to our weekly segment where we guide you on your journey to financial literacy.
We like to make these videos short and sweet in hopes that you learn a new economic term while keeping you updated on 3 financial events that happened in the past week.
Without further ado, let's get right into it. U.S. equity market started the week under pressure, but losses quickly subsided as it approached the closing bell. All 3 major indexes, the S&P 500, Dow Jones, and Nasdaq, all started off the week in the red. Also, on Monday, AT&T and Discovery announced their plan to merge their media assets in a reverse Morris Trust, a tax-free form of merging that would create a new streaming service that would challenge both Netflix and Disney+. On Tuesday, there wasn't too much going on, and it was looking like a bearish day until after hours. During after hours, SPY, Nasdaq, and Dow all came crashing down. This deep fall continued on until Wednesday, with news of the housing market affecting it tremendously. Also, people were still worried about the inflation rates that may have caused many to sell their positions. However, on Thursday, there was a major turnaround with the market, and that trend seemed to continue on until the end of this week. Overall, the market is going through a pretty rough time right now, so we can only wait and see what's going to happen in the near future. The crash on crypto just seems to continue. Ever since May 12th, where Elon Musk banned the purchase of Teslas with Bitcoin, it has seen only red days. Even last weekend, Bitcoin had tumbled 10% as Elon hinted that Tesla might sell the $1.5 billion worth of Bitcoin that it had bought for its treasury earlier this year. He backed off of those comments, but he has continued to prove to us that he can move the crypto market with his tweets alone. He is also making the case that Tesla shares and Bitcoin have become highly correlated lately. Furthermore, the news of China's ban on Bitcoin caused the downfall of crypto to continue. As we can see here, Bitcoin has dropped over 16% this past week, and coins such as Dogecoin and Ethereum had fallen 17% and 24% respectively. However, Thursday seemed to be the switch around for all cryptos, some moving from 1% all the way up to 10%. Overall, just like the stock market, we can only wait to see what crypto has to do in the near future. The reason the housing market collapsed over the weekend is because building costs have risen tremendously. So much so that some people are even saying it's impossible to get lumber right now, unless of course you pay premium prices. Anyways, the 9.5% April housing drop released on Tuesday by the Commerce Department has been caused by many builders that have been delaying their projects in hopes to get cheaper materials in the near future. But then comes the question, why exactly is there a shortage of materials? Well, let me tell you. The demand for bigger and more expensive accommodations amid the COVID-19 pandemic, which has forced millions of Americans to work from home and take classes remotely, has fueled a housing market boom. However, the virus has disrupted labor supply at sawmills and ports, leading to shortages of lumber and other raw materials. This is becoming a huge concern for many real estate investors, as there are growing worries that inflation is going to be boring its way into the red-hot housing sector. Anyways, that pretty much wraps up the 3 main financial events that happened this week, and now I'm going to pass it on to Om to discuss the financial term.
An asset is essentially something that makes you money either in the present or will do so in the future. When we look at a company's balance sheet, we see that assets actually boost their value.
Assets can be something as tangible as manufacturing equipment to something intangible such as intellectual property.
To consider something an asset, you must have the right to it as of that date.
If you sold candy to your friend for $5, that candy isn't an asset to you, but the cash itself is.
This concept is important when considering a company's cash inflows and outflows, the essence of what makes an asset. For a company, an asset can either increase its revenue or decrease its costs.
There are 4 types of assets: short-term, fixed assets, investments, and intangible assets.
These assets are expected to produce cash or cash equivalents within a year. Although valuing cash is pretty straightforward, an accountant might oftentimes reevaluate certain things that a company considers an asset in hopes to write it off for taxation.
For example, if a company gives out a short-term loan, which is considered a cash equivalent, and it seems uncollectible, the accountant can write it off as an asset.
These assets, on the other hand, are much more long-term than the short-term assets we just talked about. Examples include equipment or office space. These assets have a fixed resale value, and although that value may depreciate, it still rarely fluctuates. These are opportunities to make money by predicting the future, which fits perfect with our definition of assets earlier. This asset class includes stocks, bonds, and crypto. Now, this last asset class is a bit more complicated than the other asset classes we've covered, as it doesn't have a monetary value as such. Intangible assets generally don't have a physical form, which is why accountants
So what are a company's value as per its balance sheet from its market value to get a number for this type of asset?
things that fall under this asset class include
Copyrights, trademarks, patents, and other intellectual property.